Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, November 24th, 2020. What we'll do is a quick look at everything, both the indexes, gold, the main things I've been highlighting recently, as well as the trade ideas in the last well, I'd say 3-4 weeks have covered numerous trade ideas, and those are what's running right now, and the market's going nowhere. So I wanted to kind of reiterate that theme that the heavily indexed stocks, your FANG stocks, Apple, Microsoft, Amazon, Alphabet, continue to suck wind. This is the NASDAQ 100. It's that 15-minute chart I've been highlighting recently, zooming down. And so again, you can see that the date scaling down here. There's the beginning of November right here, and we had a breakout right there right after the elections, big run up. That was our buy signal, divergent low. Again, that was all priced in with the divergences, and it peaked out there. We ended with a divergent high, negative divergence, and since then kind of locked in. At least the last few weeks here, we're compressed in this very tight sideways range. So the market's not going anywhere. At least here's the NASDAQ 100. Similar on the S&P 500. Kind of here, I'll show you on the SPY. You look at the 15-minute chart here, and just a sloppy sideways range. So again, there are opportunities out there. They're just not right now in the broad market. So my advice, to NQ traders, ESQ traders, especially this week of Thanksgiving, either don't trade or focus on individual stocks that are not heavily indexed and fly under the radar, commodities, gold, things like that. We're going to get to all those in just a second. All right, that's that. So not much more to say. Whipsaws, I talked about that recently, that whipsaws tend to be common this week. Here's that NASDAQ 100 or NQ 60-minute chart that I've been highlighting recently. And just yesterday, I gave you this little triangle right here and said, an upside break bullish, downside break bearish, but I keep throwing out the caution that, hey, whipsaws, because I've done this year after year, around these holiday weeks, whipsaws are common. So we did get a breakdown. It was impulsive drop. If you were watching the 1-minute charts yesterday, that was from the breakdown where it broke below the triangle, we fell almost 1%. I think it was 0.9% in NQ. And, so that looked like a legitimate sell signal. Impulsive, everything you want to see, but then we snap right back up. Now, I will say the upper trend line is respecting, prices are respecting that upper trend line. So again, upside break, still bullish. We already had a downside break. But like I said, proved to be a whipsaw signal. That's common. You could get the same thing if we get an upside break this week. So take it if you want, or sit back and fry other fish, which I'm about to get to here in a second. So that's it for the indexes. Not much else to add to that. Gold definitely warrants an update. Here's the 60-minute chart. The key levels I've been watching recently. You had a downtrend line here. We had one little false pop with a little divergent high. And this level, this is the big one. Pointed out as a buying op on a couple occasions on a pullback to that level. But as I said yesterday, break below it would be bearish. Here's one where you had a breakdown that did not prove to be a whipsaw. There was your very objective stop. You could have bought again if you were buying pullbacks at that level, or shorted, waited for a break. And if you bought, then that is again a very objective level to have had a stop and gotten out of gold. It's continued to fall. That's been a drop so far. I've got to measure this way. You got to kind of guesstimate the line, or you move the other trend lines. That's about almost a 3% drop, about 2.75% since yesterday. So hopefully, active traders able to sidestep it. If you're new to the site, or if you haven't caught up on my analysis in a while, my picture, I remain longer term bullish on gold, but I can't, there's no reason to be in it yet. We don't have any type of buy signals. In fact, until and unless the euro US dollar pair breaks above this multi-year, this is a long-term downtrend line, gold's going to continue to flounder around. I pointed this out when it was hit, before it was hit, then when it was hit, that was a good chance. That's opportunity, I said, to exit long-term, investing positions in gold in the miners, and expecting a reaction there. And look, it's been 3 months now, over 3 months since we hit that with the first candle, 3.8, almost 4 months now. So we need a definitive and solid break above here. That would be bullish for the euro, bearish for the dollar, which in turn would be bullish for gold. So that, plus we still, of course, it's not just what the euro and the dollar do. We need to see gold show us something here. But there's on this weekly chart here, and daily. I've been highlighting this level here, just shy of 174 is a big support level. We've hit it a while ago. That was taken out yesterday. So by all accounts, this was a solid sell signal on gold yesterday. We took out that support on the futures, as I just showed you a minute ago, as well as here. You can see it again. I'm just toggling. That was a weekly chart. We were just on a GLD. Here's a daily chart. Again, that's what happens when support, a well-defined support level, gives way, and boom. Now, I will say this: if you were long gold and you missed that, and hey, I didn't, gold's been kind of asleep for a while. We're at support. So at this point in time, I expect a bounce. We have price support at 168.70. We also have the 200-day exponential moving average, 200-day simple coming in below there. Worst case, and I've said this in recent videos, drop I see to about 165.12. If we get there, this is much better support, by the way, than the 168.70. That's more of a minor support, bigger support there at 165.12. So I see at this point, before a meaningful bounce, I see downside of approximately anywhere from where we're at now down to about 2.3%, 2.4%. So, excuse me. So maybe not a bad time to start scaling in if you're looking for the next bounce trade on gold. I think especially if that euro breaks out, the dollar breaks down soon. We'll watch it. I'll update gold. I can't make a strong case to come in and buy. We just broke down. They're still selling it pretty impulsively today. Let's now talk other trade ideas. Oh, before I move on, one more. Coffee. I've been updating coffee quite a bit lately. It's been, broke out of this bullish wedge. These are coffee futures. JO is the ETN. I've covered that in recent videos. So there was our breakout. We've been in an uptrend. We had a pretty steep pullback the other day. Small divergent high was a technical catalyst. Came in, I had a trend line here, which we hit and bounced on yesterday, but I also mentioned we have the trend line plus this pretty good 115.85 support just below it, and so far that's held. So on coffee, ideally you want to hold it if you want to keep your stops tight just below there. If you're trying to capture a bigger trend, you can, if you were long down here, you could still have your profits at or just above entry to at least assure a break even on the trade, because sometimes coffee will do that. Sometimes it'll retrace most of the initial run like it did back here and then explode. But don't fall in love with this. Don't fall in love with any trade, but particularly commodities, whether it's coffee, natural gas, gold. Use your stops. Again, tighter stop going to cause less bleeding or give back in profits, but more of a chance to be taken out on a whipsaw. Wider stops are going to allow bigger losses, but might keep you in, have the potential to keep you in if coffee is about to embark or has embarked on the next major leg up, which I still think is possible here. Okay, and yesterday, or in the day, and I told you I'd be taking time off, which I did, so I wasn't around the majority of the day. Same thing today. This week, obviously, we have the holidays. I've been, bought a home back in January right before COVID hit, put the other one on the market in February. Finally, as of yesterday, got a contract on there. Got to be out of the house by Saturday. That's when they move in. With contract being finalized, they gave him a lease to move in before closing. So anyways, I'm busy. I'm moving everything out of that house, the last of the items. We did the big move over the weekend with the movers and all that. Just want to let you guys know I won't be around a lot of tomorrow and today as well, but I want to get these trade ideas out. If you're trading this week, man, this is a watch list I put it together recently. All the trade ideas that I've covered in recent videos over the last couple, I'd say month or two here, maybe even 5-6 weeks going back. And if you want to see, any of the previous commentary, the charts on that, just go here to resources. Anytime you want to look up any analysis or previous posts on a stock on the homepage, click on that. Click on, I did resources on the top menu of the site. Scroll down here to the bottom of the page. Use this one to the right. Search all front page posts. This will find things in the trading room as well, but the front page posts. So if you want to see, the XXII, for example, that's one that's really ripped. Type in XXII. You're going to see down here, every post that I make has symbol tags. They're all hyperlinked. If you look here and you click on, PEI, for example, now it's going to load all posts covering PEI. So by this, you can go in and they're all chronological. You can see those updates. So let's look at those real quick. And let me find the right chart here. Boom, boom, boom. There it is. All right, PEI. I'm going to go in order just how they're up today. I sorted this. Exploded. Covered this one. I said this company is filed for Chapter 11 bankruptcy protection, or was a likely candidate. I mean, they may have already filed, but I said, with that being said, so high risk. Pass if it's not your cup of tea, but I wouldn't have passed along if it wasn't a nice looking setup. And boy, did it pop! It popped yesterday. In fact, early in the morning, I took a screenshot of this list, and that was one of those that was up. And it didn't, and it didn't run away. Here's the breakout. This is yesterday right here, yesterday's trade. So this one, unlike sometimes you gap way up. This one rallied yesterday. Actually, there was a previous close. At one point, we were up 50%. And again, that wasn't a 50% gap. This was an easily actionable trade. Had you had a price alert set on it, it broke out and it steadily gained. Look at that big volume bar. Everything you want to see on a breakout. The only thing is this company is a POS because it's either already filed for Chapter 11, but right now this is the market. We have, and no offense to anyone, it's not a bad thing at all, but you have what I would call the Robinhood traders out there. The Robinhood traders are typically those new to trading, investing. They open up, their younger generation. You open the app on your phone, zero commissions. You can buy 1 or 2 shares, I think. And those traders are typically not as well seasoned. They don't know the risk. This company can all of a sudden be down tomorrow. You could gap down and lose almost all of your money, depending on what's going on there with bankruptcy filing. However, it's a momentum trade. You get in, you get out. Again, 50% yesterday, up another 27% today. So since the breakout, and we've hit that target there, that 105 target, 64% gain right now where we're at, up about 77 into today's highs from the breakout. Second target, you wouldn't be bad at all. Wouldn't be a bad idea to book profits if you caught it. I wasn't around yesterday, or I wish I would have taken it. I would most likely be taking profits here. I wouldn't have taken them yesterday because we went up through and closed above. We took out my first target, which is resistance at 78, and closed comfortably above it. So that in itself opened the door for a move up here to the second target. This may be a momentum fueled overshoot. We're trading at $1.07 right now. Pretty good resistance. If it can power on through, that would be take the money and run kind of target. I would prefer to take it here. Get out. It's Thanksgiving week. If you made 70 something percent on your money in 2 days, just move on to the next one. All right, let's talk about moving on to the next one here. Rig, one of my favorites in the energy sector. And that was one of my favorite sectors leading into the elections. The energy sector was my favorite in the S&P 500, the one that stood out as most bullish. And these stocks have ripped since I highlighted Rig. Oh gosh, well, let's see where that was. So go back to that where I left it. Here's Rig in one of the symbol clouds, or the ticker. So I click on Rig. So I would highlight it first on, there's the 18th. That was the last trade. That was back in 2015. So the 18th of November was when I first highlighted as a bullish setup. And where are we at now? 18th would be right here. There's our 17th candle. There it is, the 18th right here. So this one has run since then 116%. Boom, hit our 243 second target. That's big resistance. I would take the money and run on Rig too. If you're in it, gap right there. Big old gap, major reaction high right there. Momentum fueled overshoot. We're only at not too far below there now. Again, over 100% since then. Take the money and run. We hit my first target yesterday, parked just above it, 177, and again followed through today. So a lot of these little stocks are flying. This is a common theme. Why is this stock up 100 and something percent and the Nasdaq and S&P have gone nowhere? Because it's not a component of those indexes. That's what's happening right now. There's a dash for trash, lower quality stocks. And hey, embrace it. Do you want to marry these stocks or fall in love with a stock that was just recently trading below $1 a share? No. Do you want to hold PEI as a long-term investment when they declared Chapter 11 bankruptcy? No. Do you want to hit and run? You know, in other words, these are companies you want to date, not marry. More like a Tinder date. Get in and get out. And next one up is EXPR Express. Highlighted that again back here somewhere. You know, recently. And this is a retailer apparel store up 100 and something percent. Still going. There's the target, max target. There's 255. Congrats to those that caught it so far. LKCO starting to move, recently highlighted as breaking out here, back tested. So we had a breakout right here. Let me just show you. Breakout, back test, and it's starting to move up nice today. Again, I don't know if you can see this in the video. I can't make this larger without custom changing the font, but that's a gain of 28%, 26, 20, almost 27% today. GPOR. Another one that hasn't run yet. This is oil and gas E&P, low price, 14 cents. This one may have, you know, when you see a stock under a dollar, it may have already declared bankruptcy, and if it hasn't, it may be headed that way. Sometimes not, but still big divergent low, hasn't run yet. Sometimes what happens is the momentum traders will start sniffing out the underperformers and then all of a sudden start bidding it up. There's your targets, again, covered already. QEP. This one did break out, another oil and gas stock right there. Beautiful downtrend line. Beautiful breakout on nice volume and impulsive, and moving higher. Took out that 141 minimum target resistance, opening the door to 256. Right now it's in no man's land. It's smack between support and resistance. Yesterday on that breakout, and again it was highlighted, I believe, in that screenshot of the watch list I gave you. There was your breakout candle. So that's when that was your objective, most objective entry. Now you could take it here, but what happens is if the market or this stock comes back in, it may want to backtest 141. That's going to be a pretty big ride down, about 19%, you know, because this one's up, you know, another 14% today. Oh, okay, sorry, brief distraction there, phone call. Anyway, so there's QEP, 256, next target. QTT starting to move, another one coming off a divergent low. Nice big move today, up about 12%. RKDA, this is a area that I've been watching and looking. It's starting to, yeah, it's been looking pretty decent. Agricultural inputs, not yet taken up, not yet broken out. So this one's not an actionable trade. This is a trade setup. A lot of the other ones I just covered are actionable because they already broke out and they're running. This one needs to take out the downtrend line, and really that 344, that's your big level there. Forget about that being color-coded blue. 344 pop up of that should make it run. IPI, that one's already going. There it is. I pointed out, I believe recently you have a trend line here, uptrend line, offer an objective buy points. 1172 was resistance. We broke it the other day. That would have been your objective entry there, and right up to my 1428 target. So that's 22% in a couple days there. What, 1, 2, 3 days? If you got it on the breakout above 1172, next breakout comes on a break above 1428. It could come now, you know, or we could pull back here. But I can tell you, I have that line color coded because that's a big level. Look at these reaction highs right here. There's a gap right here. A lot of reaction highs, a lot of reaction highs. This thing is building energy. It may never break out, but if you haven't taken it yet, you don't want to buy it right here. You want to wait for a solid break above 1478, 1428. All the better if we get another pullback. You could then reload or buy into it at 11 on a pullback to just above 1172. You know, if I see that's a support, I'm not going to wait for a 1172. I might buy at 1174 or 1175 with a stop somewhat below. And either way, it could build energy for months. It may never break out, or it could break out today. And bottom line is that's your that would be a pretty significant buy point. I would put a pretty high degree of confidence that it would run up to that 2087 target on a solid impulsive breakout above there. You know, if it happens this week, it is Thanksgiving. Whipsaws are, you know, increased chance of whipsaws, so you have to just factor that in. And the thing is, oh, by the way, that'd be about a 44% run. And the thing is, let's say you took it on a breakout. Let's say that came today or tomorrow, and then it fell through. There, once it falls through, it tells you that breakout failed. So don't ride it all the way down to this trend line or worse. You know, if you take a breakout, just keep a relatively tight stop. You wouldn't want the stop at 1427. You know, give it a little bit of room. Stocks like this, you know, this thing's up 8% today, and you can look at the size of these candles. That's a run-of-the-mill move. Remember, you're not trading SPY here. SPY isn't running up and down 7-8% a day. This stock does that, and then even some. Here's a candle back there, a daily candle. It was 32% from bottom to top. So I always say know your stocks, know your securities. Why is that important? Because if you're trying to trade a stock that can go up 30 plus percent in a day, it's going to pull back 10 plus percent in a day. Therefore, if you're running a 2-3% stop, trailing stop, it's too tight. They're going to take you out. You're never going to capture the big trend because one of these little pullbacks, or little quote unquote, are going to be 7-8%. So you're targeting, in a stock like this, maybe as much as 100% return on your money. You can then use a 20% stop loss. And that is a 5-to-1 risk-reward ratio. In other words, you're risking 20% downside to make 100% upside. That's 5 times on your money if you get the trade right. 5 times what you'd be risking if you're stopped out. All right, moving on, and we're almost done here because I'm not going to go through all of these. I just wanted to highlight some of the charts. WMC, again, all these covered in recent videos, already broke out, still running. UAN, still running. Seed, another ag input company, not really doing much yet. ORGO, I mentioned this one broke out the other day. 479 was our buy point, or a break above 479, and it's run about 14% since then. And that's it. Let me wrap it up here. There's some others that might have already run and have taken a breather today, like PEIX, for example. That was a short setup here. Hit up my final target, which was a good time to cover and reverse. And from the short trade itself was good for about let's see, why am I not measuring out here? Oh, there it is, about 44%, 45% drop, and then the reversal, if you covered on that 516 support, about a 40% bounce. So this is swing trading, and again, I'll turn my focus after this week is over. I'll be all settled in. We'll have closed on the old house. And over the weekend we'll be putting away a lot of the things we moved in. So I just want to let you know, at some point by early next week, my focus will be back 100% on the market. These trade ideas and others, that's all I'm going to do is and as long as the stock market is grinding like this, I'm going to put more focus on unconventional trade ideas. I'd say unconventional. It could be commodities, gold, Bitcoin. We'll look at that. I know that's been running. And we'll always keep an eye on the market. I'll always do updates. The market's not going to move sideways forever. From these sideways ranges usually come the next trends. Here's a little period of consolidation. Boom, there was your next trend. Little consolidation, there was a trend. And sometimes that trend goes the other way. So we'll watch the broad markets, but as of now, very little trading ops. It's the easy money, like I said, is being made elsewhere, particularly in stocks that are not heavily indexed, like components of the major indexes here. And that's about it. I want to wrap it up. And if I see anything big before the end of the day and I'm around, I'll post that. Otherwise, I'll do either a late session or after market wrap, or we'll just pick it up tomorrow where we left off today. This has been Randy Finney with Right Side of the Chart. Have a great day.